It is, of course, the big story of the after-hours session. AT&T winning court approval for the $85 billion Time Warner deal. All those stocks on the move, including all the media stocks across the board. AT&T, we should point out, is lower. Time Warner is soaring. It has been a long journey to get to this deal done since it was initially announced back in October 2016. So what do we make of it, guys? What's your first reaction as a trader in terms of where you would look to invest or sell, Tim?
Well, again, I think the pure content plays continue to be well bid. I think the entire sector is now going to be a feeding frenzy. I think, and we've been seeing this, and for a while there, again, media companies had a bid based upon their media and their content. I think that's obviously come back.
Yeah, and when we were saying the media stocks across the board, we're talking Discovery, we're talking Lionsgate, we're talking Viacom, we're talking CBS, Karen.
Yep.
What do you make of all this action? Everything is moving higher.
Everything is moving higher. And actually, Tim and I were talking about this, the market. I mean, it's really good for the market.
Yeah.
So if you don't want to have to pick winners that have moved already on the anticipation of a bid that might take some time to get ready, I don't know. It's good for the market, no question.
All right, let's get some more on this decision first before we proceed with the conversation. Checking with Eamon Javers, who's outside the courthouse. Eamon.
Yeah, Melissa, that's right. It was an enormous victory here for AT&T with their $85 billion merger deal with Time Warner, getting the green light here from a federal judge after months of court wrangling. The judge ultimately, in the end, not putting any conditions whatsoever on this merger. That means the parties are free to go ahead. We saw the lead lawyer for the AT&T side come out very careful here not to gloat, saying that he's disappointed that it took so long to get to this ruling, but they're relieved ultimately that they got the ruling they did. Now come the aftershocks, Melissa. Now comes the implication for the media sector, for the telecommunications sector, for the Department of Justice, for the White House, for the president himself. The president is on Air Force One right now. He campaigned against this merger back in 2016. He's spoken against it as president of the United States. Will he weigh in now that his side has suffered a defeat here? What does it mean for the Department of Justice's approach and for all of those industries that you guys have been talking about and all those companies with pending mergers teed up? This could be the starting gun to something that could be a very big industry trend, Melissa.
Yeah, Eamon, thank you. Eamon Javers standing outside that courthouse in D.C. Steve Grasso, where do you go here in the space?
So I think you have to, we discussed it with Tim mentioned Fox. I think Fox is obviously the clear-cut winner. But when you look at Disney, it makes me also think that obviously they have competition for this bidding process. But are they still the king of content? Or now do the Bears get emboldened and really push this more than just range-bound? I think that's the takeaway.
Yeah. Karen mentioned in the break, and she alluded to it before, but like CVS and Aetna, just seeing people on Twitter mentioning that. I mean, both those stocks are higher now. So it opens up not only obviously this vertical, but other industries as well. So I think if you really want to just broaden it out, it's not market bearish, let's put it that way. It should be on the margins market bullish.
Yeah, Cigna Express Scripts is the other one that is
tighter as well.
The spreads are tightening in the after-hours session here.
Yeah.
Where do you think the opportunity, looking back, where do you think the opportunity was?
The opportunity, I think the risk reward was probably better there. And actually, you and I were talking during the middle of the day, and you said, what about these? And I looked at, wow, let's see, the spreads were pretty big. They might have had a more interesting risk reward. I mean, 2 years ago, they were all merging with different companies, right? There was Humana and Aetna, and so and Cigna and Anthem. So they've all found other parties. I had forgotten Humana was in talks with Walmart at one point,
right? Rumored,
which we don't rumored, right? Rumored in the Wall Street Journal. I don't know if that's true or not, but that landscape has changed. But now these mergers seem to have a much higher chance of going through. Those spreads are collapsing.
And if you're in the camp
collapsing in a good way,
right? Like who believes that the Justice Department, if they do take another case on an antitrust case, it's one that they want to win. It might make them more reluctant to enter in a case that it's not a slam dunk.
Look, there's no question to me that I think this actually makes it a very enticing. Horizontals could be going on in different sectors. I brought up the airline industry where, we had a massive wave of consolidation called 5 or 6 years ago, and I think you actually could see some of this again. I think United would be looking to make an acquisition, and, a JetBlue or something like that makes sense, especially after this ruling.
All right, let's get more on the media space here. Bring in BTIG's Rich Greenfield. Rich, what's next?
Next is Comcast. I mean, I think there is no doubt that, there is a party going on or excitement building inside of Philadelphia tonight that they're ready. I mean, it really wasn't a vertical merger. I mean, we were all looking at AT&T-Time Warner as the determining factor, but it really wasn't. I mean, most of the assets in Fox we're talking a studio, no vertical integration issue. International, Star TV, Sky, no impact. And even the regional sports networks that a lot of people talk about as vertical integration, 2/3 of them are not in Comcast territory. So there is no vertical integration. So this has been kind of looked at as like the driving force. But now that they have this, the runway is clear. There's no doubt that with that kind of clearing, you now see a very aggressive bid from Comcast. And I think the main point that anyone watching should be thinking about is Comcast lost in 2004. They were embarrassed when they tried to bid for Disney. They lost in 2015 when the government rejected, for regulatory reasons, their acquisition of Time Warner Cable. Comcast is not losing this time around. They are in it. They want to win. And like, they are not losing to Disney here. And so the question is, how far, to your question on Disney, how far is Iger willing to go? Is this a must win for Disney?
And how far is Roberts willing to go?
I think
if
substantially
you're a Comcast
further.
Shareholder, which full disclosure I am, as a Comcast employee, what should I be worried about?
Look, Brian's 58 years old. I think he's thinking about how does he position Comcast, not just domestically, but how does he position Comcast globally for the next 30 plus years? There is no, when you look at the potential assets here, nothing looks like Fox. So you don't have any plan B. So I think he's willing to go very far for Fox.
But why was plan A's? Why did we wait for Disney to make their bid before they came in? That's puzzling. In other words, why was Comcast more aggressive after the fact?
Oh, look, I could say the first chess. Look, I could say the same thing. Why did Disney allow AT&T to buy Time Warner? Time Warner theoretically would have been a better asset for Disney to buy. I think there's been.
Because Disney's strategy, I think, in terms of getting it over the top and their distribution, I think was unveiled, and this makes natural sense. It amped up their content.
Yeah, but I think, well, first of all, I'd say the biggest reason why this is all happening is look what's happened with Netflix, Facebook, and Google. I mean, I think these executives didn't see this coming. I mean, they were blindsided. I mean, Netflix is now a bigger market cap than Disney. I mean, they didn't see this type of secular behavioral change in consumers that we're seeing. I mean, C3 ratings, what everyone looks at for TV ratings for linear television, were down 12% for the last season, full season. I mean, these numbers are just, things are changing very fast. And so I think the honest answer is they didn't think about it back then. I mean, I think they should have, but I think that wasn't where their head was at. And things are moving so fast now that I think everyone is reacting in real time. And they saw that Jeff is selling. They saw that, you know, I think things have just spooled at a very, very accelerated pace. So
if vertical mergers are on the table now, what is the deal? What deal do you think could happen that nobody is talking about? And could it involve a big tech company as opposed to a media player as the acquirer?
I think the crazy part about this, you know, when people say Disney's trying to buy Fox because they want to replicate Netflix and fix direct-to-consumer, Netflix hasn't bought a studio. Netflix didn't buy a satellite distribution platform in Europe. They just spent money and invested. So I would say the tech companies are probably looking at the success of Netflix, probably going, we don't need to do this. We can just go out and hire great content, you know, producers, actors, actresses, and literally just build this from scratch with our really strong balance sheets. I think one of the questions is, okay, we got E3 going on in LA right now as we speak. Major announcements coming out of E3. Brandon Ross, my colleague, is on site there. I mean, this whole world of video game. You've had Ninja from Fortnite on set talking about the explosion of video gaming. Like, how has the entire media space not bought video gaming? I mean, I think that's the gaping question is consumers are moving towards gaming. They're not watching linear TV.
So the next vertical could actually be media gaming.
I think that makes a lot of sense. I mean, how does nobody buy any of these companies? And then look, you've got wild cards. Where are mobile platforms? Who are the big mobile platforms that you theoretically could buy?
Right.
There's no control shareholder of Twitter. You know, Spotify is now a public company. I mean, Daniel does have control. But I mean, if you looked at which of the big media platforms, tech platforms, mobile platforms has no control shareholder, the only one that stands out is Twitter.
Huh. Stay right there. Let's get more on this major court ruling to approve the AT&T purchase of Time Warner. Bring in David Faber, who is on the fast line for us. David, your thoughts on the deal? And of course, you've been reporting actively about the Comcast potential bid that could happen tomorrow. What's the latest?
Yeah, I think, Melissa, as Rich sort of outlined there, that they have obviously gotten the green light to feel free to make that bid. And I would expect tomorrow that Comcast, our parent company, will likely unveil that bid that they have made no secret of. In fact, even choosing to come public with the fact that they were going to make an all-cash offer and a willingness on their part. This is still going to be very important, I think, on the regulatory front. despite today's ruling, the willingness of Comcast to meet or if not exceed what Disney was willing to offer. And it's important for people to remember, in the merger agreement, Disney was willing and is willing to divest all of the RSNs and businesses that contributed up to $250 million in EBITDA in order to get regulatory approval. Comcast has told us it will make an all-cash offer. We expect, obviously, it will be in excess of what Disney's all-stock offer is currently worth, well in excess, perhaps. And they've also said they will meet, if not exceed, those provisions that Disney has already made. So we'll see what's in the bid when it comes. Regulatory will still be important. It will still be a key consideration of the Fox board. Disney still has the lead when it comes to the actual approval time. At least most attorneys tell me by a few months, and time, of course, is money. And to Rich's point earlier, the question will become, to what extent is Disney willing to raise? As I reported a couple of weeks ago, Disney has secured financing in order to actually add a cash component to their bid, should that be desired by the Fox board. And again, as we've been reporting for quite some time, I think Disney is going to fully join whatever bidding war would occur here to make sure it can maintain these assets as is currently under contract to buy them, whether it also be Sky and or all the Fox assets in question. So this sets up what will be an interesting battle, Melissa, that conceivably will take place in a fairly short amount of time, with Fox's shareholder vote scheduled for the 10th of July, although, of course, that can be delayed.
Just pivoting slightly, David, I know you talked to the management team over at Verizon. Verizon's experiencing a changing the guard, so to speak, in terms of getting a new CEO. What's your sense as to their willingness to do a deal themselves, their appetite?
You know, that's a great question. The last time I spoke to Lowell McAdam only a few weeks ago, and of course he still is the chairman and CEO of the company, he indicated they're much more focused on digital assets than they are on anything linear. We do know that they were company A when it came to potentially buying these Fox assets. They didn't really hang around very long, and they offered an at-market potential deal of some kind. We do know as well that they at least had thought about, could they do something for CBS, but frankly, that was going to go nowhere because the controlling shareholder of CBS is not interested in selling the company to Verizon. I don't know, Melissa, what their plan is over there other than the focus on 5G, really, which, of course, is a very different direction than the one AT&T has gone in over the last few years. Not that they're going to not offer 5G, but doubling down on the network and on the wireless business, in a sense, is what Verizon may very well do, as opposed to the strategy embraced by AT&T, which is, some would say, moving very quickly away from what was their core business not that many years ago.
David, it's Karen. Let me just go back to Disney for a minute. So the Murdochs, Disney is their preferred bidder. How much will that matter ultimately if it's just an all-out war between Comcast and Disney?
Yeah, well, you know how these work, given your line of work. I mean, it's going to potentially go back and forth. They're going to have their 5-day provision where they can meet any bid, and the board is obviously going to have to decide whether a Comcast bid could lead to or does represent a superior proposal to Disney. It's unclear to me what it's not just going to be the dollar amount. And then you're right. Murdoch wanted Disney stock. The Fox board felt like it was a better fit in some ways, and therefore the Fox shareholders would benefit more over time, not just the Murdoch, but overall. It's still tax-free to Fox holders. That is the deal itself, and would not be where you either use cash or even if Disney were to add cash, that may figure into it a bit as well. I don't know where the number is, but I think this Fox board is going to be obligated to communicate very fully about their decision-making, not just on the price, but also on their view of regulatory and timing. And I think those things are all going to be in the mix here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.